Aloha folks, thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to look at a company that has been giving 28 years of dividends. Analysis have been rating this company as a buy or strong buy. Hedge funds have increased their positions during the last quarter, and corporate trading have bought shares the last 3 months. So hope you like this video. Do me a favor, if you do, hit that like button. If you're not yet a subscriber, hopefully by the end of this video you'll like the content and you will subscribe. It really does mean a lot to me if you join my little community of Hana of investors. As always, please remember to do your own research. This is not financial advice. I'm not a financial advisor. With that said, let's take a look at this company, guys. So the company that I'm looking at is Deere. Ticker symbol is DE. Many of you probably know about this company, but if you're unfamiliar about this, it is a company that engages in the manufacture and distribution of equipment used in agriculture and construction. So if you go to their website, you can see some of their products. What I really like about it is that they are also starting to be part of the EV direction. So they're making EV construction vehicles, so which is awesome. So take a look at it if you want. Definitely an interesting company. I think it's definitely a company that I like, in my opinion. So let's take a look at Yahoo Finance. Yahoo Finance, you can see the 52-week range. The high is 446 and the low is 283. At the time of this video is about 371. You can see the PE ratio is about 18. Forward dividend yield is 4.52, and then you can see performance outlook. It's kind of like a mix. Now if you look over here, you can see the earnings. They missed the earnings this quarter, but there's 3 out of 4 beats. So, and then if you look at the financials, you can see the 2020 compared to the 2021, you can see a good increase from there, from revenue of 35 billion to about 43 billion in 2021. And then if you look down the recommended trends, right now it's a lot of holds, some buys and some strong buy. And then the ratings between the buy and hold, average is about 399. Currently at the time of this video is about 371, so you're getting it below the average. Now if we swing by and compare it based on the 2-year performance, so DE is this one, and then you got the S&P 500. You can see it has been beating the S&P 500 in the last 2 years. Now if you go to the 5-year mark, you can see it's still beating it the last couple of years. So pretty good performance. Now if we go to Seeking Alpha, what I was looking at is the 10-year performance. As you can see, the 10-year performance rated as it's up 334%. Now if we go to Simply Safe Dividend, based on their dividend safety score, they're rated as very safe, which is 83. Dividend yield is 1.22. It is a mega cap, and then here's the beta, which is average. You can see here the key metrics. You can see forward payout ratio. Payout ratio is 22. Forward payout ratio is 17. During the recession, they maintain it. And you can see the dividend streak of 28 years without a reduction. Dividend growth, the last 20 years, 11%, the last 5 years, 9%, and then the latest is 7%. And again, I always like that upward trend. And then you can see uninterrupted dividend streak of 28 years without a reduction. They've only increased it 1 year. So I would like to see this a little bit more. So we'll see how that goes. Payout details, you can see quarterly in the months of February, August and November, and your payout is $4.52, which breaks down to about $1.13, $5, $5 for the quarters. Yeah, and then you can see based on the dividend, Simply Safe Dividend, they feel like it's overvalued. And then you can see a payout 52-week rate is right in the middle of the high and the low. And then looking down, you can see a little bit more information in there. Total sales, and then return on investment capital 11%, Return on equity is 35%. Now let's swing to Webull. Based on their analysis, there's 28 of them they rated as a buy. You can see a strong buy 28%, a buy of 35%, and a hold of 32%. Their price target is in the high of 450, average of 399, and then the low of 289. Now if we go to CNN Business, based on their stock price forecast, they rated as a high of 463, a medium of 415, and then the low of 342. And then their recommendation is also a buy, 14 analysis. You got 3 outperform, 8 holds, and 1 underperform. Now if we go to Nasdaq, you can see based on their analysis, there's 20 of them. They're rated at consensus of a strong buy. And then here are the analysis firms. You got Citibank, Barclays, Morgan Stanley, JP Morgan, Edward Jones. You got Wells Fargo. And then their analysis rated as a high of 450, average of 441, and then the low of 342. Now if we go now and check out bar chart, looking at bar chart, you can see their price target is pretty similar to 450, 411, and then 342. And then their average analysis rating is a strong buy, moderate buy 3 months ago, and then the last month was a strong buy, and then currently is a strong buy. Breaking it down, currently is 4 holds, 1 moderate buy, and 11 strong buy. Now if we swing to Stock Rover, based on their analysis, they rate it also as a buy. There's 16 of them, 11 strong buy, 1 buy, 4 holds. And then if you go to the industry versus the risk and return, you can see S&P 500 is right here. Based on the 5-year return, you can see S&P only brings about 58, the industry about 17, but you can see DE has about 212%. Now if we swing to tip ranks, based on their analysis, they rate it as a moderate buy, 8 buys and 3 holds. Price target 11% upside to about 412, and then you got your highest price target of 450, average of 412, and then 342 for the low price target. Now if we go to the stock analysis, you can see outperform of a 10. Hedge funds have increased their holdings. If you look at that, it's positive. And then you can see hedge funds have increased holdings by 77 shares last quarter. And then if you go a little bit here, you can see inside trading, and you can see corporate insiders bought shares in the last 3 months. Insider confidence is positive. Yeah. Now if we look at simply Wall Street based on share price and fair value, you can see the fair value is about 348. Currently is about 371, 6% overvalued. And then if you look at some of the overview, you can see here price to earning ratios below the average industry. Earnings are forecast to grow 5%. They've grew 13% over the last past year. And then the risk is debt is not covered by the cash flow. Now we go to Robinhood. Based on their analysis, if you look over here, you can see a buy of 65%, a hold of 30%, and a sell of 3%. Now if we go to the performance, at the time of this video, they were up 2%. For the week, up about 3%. And then for the month, it's up about 4%. 3 months, it's up 23%. And then for the year, it's up 10%. And then the 5 years, it's up 189%. So my take on this is it's a great company. It's one of the companies that I think that many people have in their portfolio. Whether or not I'm going to add it to my portfolio, not sure. But if I am looking at the agricultural side, this is one that I definitely would consider. But at this time, I'm not looking for that one. I think, with the portfolio that I'm going to create, I'm not sure where this one falls in that place. But I'll definitely put this on my watch list. As you can see, I'm going to add it. I'm going to add it to my watch list. So with that said, thank you so much for watching. Hope you like this video. If you do, give it a thumbs up. Please check out the other videos as well. Definitely stay cool, keep investing, and I'll catch you guys in the next video, right? Take care. Aloha.